Hi, this is Alex and Dave here with Williams & Company. We're here I guess it's morning when we're recording this. I don't know what time it'll be that you watch it, but we're here to update you on the CARES Act and also actually some on the FFCRA that was passed a couple of weeks ago as well. We're going to go through some slides here together during this presentation, and you're welcome to reach out to either of us. Also, you're welcome to reach out to whomever you normally work with at Williams & Company. And then we'll also have a link to our website and email address if you don't normally work with someone at Williams & Company, and we can get you set up. So thanks for joining us, and we hope you learned something. So President Trump signed the CARES Act into law back on March 27th, so really just a week ago, or a little over a week ago now. And there have been a lot of changes that have happened ever since then. And for example, the application for the Paycheck Protection Program has changed at least 3 times. And there's a lot of other items that are changing constantly too. Really, the CARES Act was established to keep people employed and to keep businesses operating. Trump wants to make sure that once COVID-19 has really kind of run its course and hopefully has passed this high stage, that businesses can open back up and get back to running, and they don't have to worry then about hiring all of their employees back. So that's what the CARES Act was really brought to be. So we're going to go through some of the items that are supposed to help keep employment up during this period.
Another thing was also to keep them off unemployment too.
Mm-hmm. Yep. So we at Williams & Company are doing our best to stay on top of these changes and get that relevant information out to you. It's constantly changing, and we have, I think all of our shareholders and managers are watching it closely along with some of the other staff. So we definitely want to help you make your business successful and kind of weather these hard times. And just like I mentioned, the changes that are constantly happening, this information presented today on April 7th is correct to our knowledge. So we hope that it doesn't all magically change again here really soon either. And then we've also included a lot of information on these slides for you to refer back to, so you can pause the screen and take a look at the information there if we don't discuss it in detail. The items that we're going to discuss today are the Paycheck Protection Program, the Emergency Government Disaster Loan and Grant, Qualified Improvement Property Correction, the change to NOL carryback rules, the Employee Retention Credit, some of the changes to FMLA under the FFCRA, and then also the Advanced Tax Credit for Paid Leave that's under the FFCRA, or the Families First Coronavirus Response Act. With that, we'll dive into our first area, which is the Paycheck Protection Program. The Paycheck Protection Program was probably the biggest thing of the CARES Act that you're hearing about presently. The government allocated $350 billion to this program, where they are providing 100% federally guaranteed loans to small businesses. If you as a small business are able to maintain your payroll during this crisis period, they will forgive the loan. Otherwise, the loan is at most a 2-year loan with a 1% interest rate, so very low, very inexpensive way to borrow money. Lenders did start processing these for small businesses on Friday, April 3rd, and then on April 10th, this Friday, they are supposed to begin processing for sole proprietors. So some of you may have even signed up for this already, because I know our firm sent out quite a few emails regarding the Paycheck Protection Program and just trying to keep you informed so that you could work with your lenders to get approved if it was something that you were eligible for and interested in. As far as eligibility goes, it's the bar to be eligible is not very high in our opinion. We have a few points here for who qualifies, so we'll run through those quick. One is a small business with fewer than 500 employees, and there's some caveats there. A 501c3 or nonprofit organization that has less than 500 employees. An individual who operates as a sole proprietor or an independent contractor, so you don't necessarily have to have employees. So that would be the self-employed individual too that regularly carries on a trade or business. A tribal business concern, or a 501 C19 veterans organization. So quite a few businesses. I think most of the clients here at Williams & Company qualify within one of these categories. In evaluating, the eligibility, the government is going to look at if you were in operation before February 15th of 2020, and then also did you have employees to whom you paid salaries. The items that they won't be looking for is your ability to secure credit elsewhere. So you don't have to be able to go to a bank and get a line of credit or max out credit cards or anything like that. And then they also don't look for a personal guarantee, nor do they look for any collateral for this loan. So these are really kind of some strange terms that you're probably not all very familiar with.
And with that being said, though, we do have some banks that are, because all the banks have different rules and regulations, and I did run across one that wants to see that you're making a profit, which is not a requirement for this loan.
No. And with that, I'm sure we'll talk about it again, but each lender is interpreting this a little bit differently. So we really recommend that'll be where you start. But towards the end of this section, we'll go through some of the next steps for you. One of the items we wanted to make sure we discussed were the certifications, because these are where you're saying that you're certifying in good faith on this application. The first item is that you were in operation on February 15th and that you paid salaries and payroll taxes or independent contractors. The second item I think is one that there's been a lot of talk about or questions on, which is current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. We think it's really important that you know that the law does not require a hardship to be able to qualify. Your business doesn't have to be shut down. You don't have to have all your employees be ill and gone to be able to say that there is economic uncertainty. The third bullet says, the funds will be used to maintain payroll. Also qualifiable items are mortgage interest payments, lease payments, and utility payments, which we'll get into that a little bit further as well. You'll also have to verify the number of full-time equivalents employees, and we have noted that that's an item that lenders are also interpreting differently. Some want you to take the number of hours that you paid to your employees divided by 2,080 hours, and others are looking for the number of employees based on your 941s, for example. So that's where we definitely want to talk to your lender. You're looking at the sum of the payroll costs. They have to be at least 75% of the loan that you receive within that 8-week period afterwards. And also, you can't apply for another Paycheck Protection Program loan. You can only apply for one. The second to last bullet point is just saying that all the information that you're providing to them is correct to your knowledge. There is some information about fines and possible jail time, so I give you a moment to look at that on your own. And then the last item is just saying that the lender is going to confirm that you're eligible based on the items that you're providing. So the loan can be up to 2.5 times the average total monthly payroll costs. And just below, we'll get into the total payroll costs. We've seen a lot of institutions just allow you to use 2019 because it's pretty simple to tie out that amount to. They can confirm it with like your W-3 or 941s from your payroll taxes. The most that you can borrow is up to $10 million, but I don't think us as a firm even really have any clients that are going to fall into that. So hopefully that isn't an item for you either. Items that qualify as payroll costs under the Paycheck Protection Program are salaries and wages, payment of cash tips, payment for vacation, parental, family, medical, or sick leave, the allowance for any dismissal or separation, payment of group health care benefits. We've also found that medical reimbursement plans qualify as this as well. Payment of any retirement benefit to your employees, and then the payment of state or local tax assessed on the compensation, but not employee state tax withholding. Items that are excluded, I think the biggest item that you need to be aware of is the salary that exceeds $100,000 for any employee must be excluded. So you're able to keep at least, include in your calculation $100,000, but anything beyond that has to be pulled out. The next item is the qualified sick leave wages that you claim a credit for under the Families First Coronavirus Response Act. We're going to get into this towards the end of the presentation, but just so you know, you can't double dip and have both the Paycheck Protection Program and the credit for those wages. And then the third item is any employee whose principal place of residence is outside of the United States. As far as loan forgiveness goes, they look at the time after you receive those loan proceeds. They look in the 8-week period afterwards to see what you spend the dollars on. So the items that are allowed are payroll costs, which we just went through a couple slides ago, what was eligible. Interest on mortgage obligation, so any loan that you had prior to this, you'll be able to include that interest. Rent, utility costs, so it'd be like your gas, electricity, water, phone, internet, and then any additional wages paid to tipped employees. So kind of an obvious one, but worth noting is loan forgiveness can't exceed the principal. And then also for the loan to be forgiven, I think we noted this before, but 75% has to be used on those payroll costs. Otherwise, a portion will probably not be forgivable. If there's a reduction in the number of employees, so that's why we think that's important to know how is your lender calculating that number. If there's a reduction in that, you can also have a portion not be forgivable. But they do have a caveat in here that if by June 30th of 2020, if you're able to bring those employees back on and increase your wages, it should still be forgivable. So we have, some questions. We're not quite sure how they're going to determine that based on, if they're looking at the 8-week window, but they're also looking by June 30th. So we hope to have more information to you soon, I guess once it's available to us for how forgiveness is truly going to work or look like.
Yeah, because this is an area where if you're a business that's, take a restaurant, you're not fully open, just doing carryout. You probably don't have as many wages, but hopefully in the 8-week period we'll start bringing some of those people back on, and by June 30th we'll have our FTEs back so that you can get that portion forgiven. So we're recommending that you apply now instead of wait, I guess, is kind of what we're saying.
Mm-hmm. Just a few additional facts. One question that we saw was, should everyone apply for the Paycheck Protection Program? So really, we think most businesses can benefit from this. Worst case scenario is you have a 2-year loan with a really low interest rate. There's no penalty for prepayment, so if you decide you want to pay off the loan, a lot sooner because businesses is back to normal, you can go ahead and do that. Farmers and sole proprietors with no wages paid to employees can still apply for up to almost $21,000 if their income was at least $100,000 for 2019. And then also, if you're affiliated with other companies and organizations, the number of combined employees needs to remain under 500. There's some exceptions to this, so if you think you fall under that, it's probably best that you speak with someone here at Williams & Company and we can help you navigate that.
Yeah, and probably the part that we don't have right now is, at the end of the 8-week period, you turn in your information and get the loan forgiven, or part of the loan forgiven, however it turns out. And we don't really have how that's going to work for our farmers and sole proprietors because, they're looking at last year's, say, Schedule F. Well, we won't have a Schedule F by 8 weeks, so more guidance will be coming out on that, I'm sure.
Yeah. Thank you. So the application, because maybe you are one of the small businesses that does want to apply, we recommend first that you contact your local lenders and find out if they're approved and ready. I think most at this point are offering this. So I think a lot of the banks in at least our Northwest Iowa and South Dakota areas are providing these loans. You also need to ask them what documentation do you need to submit. Do they want your quarterly 941s or your W-3? I've had one that even wants your this payroll report for every single payroll in the prior year. So that's a lot. So you definitely want to ask those questions first so you can start gathering those documents. Also, if you have existing debt, you should go ahead and check with those creditors and make sure that they're okay with you also obtaining this loan. To our knowledge, most are absolutely okay with it just because the barriers to have forgiveness are not very high, but you should still verify. And then also determine, your average monthly payroll costs, the FTEs, and complete the 2-page application. We did provide a few links to some different websites like the Treasury's Facts. They have a lot of great information out there. The SBA has a nice site that does a good summary for the Paycheck Protection Program. And then also we provided a link to the application, which I think if you Google, you can find all of those items as well. But we found those to be good sources. I guess one other item that we did recently here, I think it was either yesterday or on Sunday, that President Trump did indicate that if funds do run out, because they are anticipated to run out pretty quickly, he does hope to be able to put more funds back into this program. But really that's a question as to when. So we think that this is, if this is something you want to do, that you should probably try to do it now.
Yeah, and today I read a few more in Congress are saying that also. So I think if they do run out, they'll put more funds in there. But like Alex said, when will they get that approved? Because it's not going to happen overnight, as we know in Congress.
Right. Okay. So the next loan that we wanted to discuss is the Economic Injury and Disaster Loan. This is an SBA loan that can provide up to $2 million of financial assistance to small businesses and nonprofit organizations. And it's specifically related to an injury, an economic injury as a result of COVID-19. So when you apply for this, you're actually eligible, or you're actually provided a $10,000 grant or advance. And so even if you're not approved, you get to keep that $10,000 as just a grant. You don't have to pay it back. Why would you apply? You would apply if you needed funds to keep your business in operation longer. Because unlike, the Paycheck Protection Program, that's a quick payment of funds to you, it would probably take a little bit longer to get signed up for, but it would be longer payment terms as well, so you wouldn't have to pay it all back within 2 years. The Paycheck Protection Program, yes, it's very similar, but or it has some similar items, but we'll go through a comparison for you here at the end too of the two programs.
And since it's a economic injury, we're also saying probably wait a little bit before deciding if you're going to apply for it, and see if you have more economic injury for this loan.
Yeah, you'll definitely want to work with your person, whomever you work with here at Williams & Company, to determine what's best for your business.
And this is one where you definitely want to check with your bank, because they are going to need collateral. And we'll get into that, but just thought throw that out now.
Yeah. So can you have both the Economic Injury Disaster Loan and the Paycheck Protection Program loan? So the answer is yes. The short answer is. The long answer, though, is you can't include payroll costs on your Economic Injury Disaster Loan, though, if you're including those on your Paycheck Protection Program loan. So that means you'd have to borrow the Economic Injury Disaster Loan for other items. So I don't know if that would be then your utilities or supplies or some other vendors that you're paying, but you wouldn't be able to pay your employees with those proceeds. On Wednesday, April 1st, they did have a new application out on their new website, so you can go to the SBA and look up a bit more on this as well. A few more items. So farmers at present are not eligible to apply, but we have found that ag-related businesses might be able to. So you can contact us and we'll try to help you to determine if you could be eligible or not. Also to note that payments on these loans are deferred for 1 year, and then they're also available until December 31st. But like Dave mentioned, we have to make sure we substantiate that economic injury or loss. So if you can't do that at this time, there's probably not, you wouldn't really be eligible. So here is a comparison of the Economic Injury Disaster Loan along with the Paycheck Protection Program. So it goes through the covered periods. Paycheck Protection Program is done here at June 30th. but the economic injury disaster loan will be based on the declaration, which I believe is December 31st. Loan amounts vary quite a bit. Interest rates as well, up to 3.75% as a max on the economic injury versus 1% on the Paycheck Protection. Your loan duration is a wide difference too, 30 years versus 2 years. Forgiveness available versus that $10,000 grant. No collateral being required versus at least collateral for an economic injury disaster loan over $25,000. You also have to include a personal guarantee on that loan, and it's directly done through the SBA. Anything else to add on that one?
No, I think that covers that.
Okay.
Okay, so then they also looked at depreciation and carrybacks of NOLs. So the first part we're talking about is the qualified improvement property. They made a change. So back in 2017, they took away our bonus depreciation on qualified improvement property, which is non-residential real estate. So if you have building improvements, even counts elevators and escalators and internal structure of the building, now it qualifies for this 15-year property, which then 15 years qualifies for the 100% bonus. With the 100% bonus, you can have a loss, where Section 179, if they would have went with that, you would not have a loss. So that's a positive thing. And what they've done is they changed the NOL rules. Take a look at the so on NOLs, we can go back in 2018 and 19 and change that 39-year property to the 15-year, amend your tax returns, and you'll probably end up with a loss if you had a big improvement to your building, and then you can carry that back 5 years now. They eliminated where you could only carry it forward, but you can carry it back to previous years, and if you're a regular corporation, you could end up with getting some money back in the 39% versus where we're at today, 21%, and carrying it forward. So there's some items that you want to take a look at your previous year's return and see if you qualify that. Also, if you did have a loss in previous years, you'll be able to, or say in 2018, you'll be able to carry that back also. So you'll want to look at that also. The other thing is, they're expecting a lot of businesses to have losses, so that's why they went to the 5-year carryback, so that you're able to get a refund on your tax returns by amending it.
Yeah, that was a way of them hopefully putting more cash back into the pockets of businesses, is by applying or by amending your prior year tax returns, you'd be eligible for those refunds. Also, we're not quite positive if Iowa will end up coupling with this or not at this point in time.
That's right. Yeah.
The next item we would like to discuss is the employee retention credit. So the employee retention credit can't be taken if you're also taking the Paycheck Protection Program. So you're limited to one or the other. So that's the government trying to keep you from double dipping and taking multiple credits or forgiveness on items. You receive immediate credit or immediate benefit from this credit by reducing the amount of payroll tax deposits that you have to make for your employees' wages. And then also, while filing your 941s, you can either get the amendment or the amount due to you after that, or you can file this Form 7200 to ask for payment sooner, depending on it. So we'll get into some of the details here. So the employee retention credit is a fully refundable tax credit. So that means it can be paid out to you on eligible wages paid between March 12th and December 31st of 2020. So the maximum that you can get for each employee is $5,000. Sorry, Dave, I'll let you keep going.
That's fine. You're doing fine.
No, it's okay.
Yeah, so it's $5,000 for that time period, and then also
Next one.
yeah. So eligible employers, for this credit during the 2020, and it also includes tax exempt organizations. So you can, but you also have to have proof that you had, you laid off people or you had gross receipts. They have to drop below 50%. So, it's going to take, some businesses will not qualify because they're probably still opening, even like us, we're working at home and so forth. But, you're going to have some restaurants, some other business that had to close, barber shops and things like that are going to have, a drop. But once that, so it's compared to the quarter in 2019, and once that employer's gross receipts go above that 80%, then it stops. So if you happen to go above that in the third quarter, you're above the 80%, you will not get it for the third quarter or the fourth quarter. So you'll only be able to get it for, say, the second quarter then. So it's limited to how long it will last. And, I think what they're doing is they're looking at, they're hoping that you'll get back in business and you don't need the help, and so forth again. Local governments are not eligible, and self-employed people are eligible for the credit. Again, there's no guidance out on how you're going to apply for that credit. I'm assuming it's going to be on the tax return, but there's nothing out there yet. And it's against the employer portion of the Social Security, so it's not, like the employee portion, it's just the employer portion of the Social Security. But it's a credit that's refundable, so, if you apply, you can use that Form 7200 to get an advance refund of those dollars. And that form is out there today, so, people can start using that because it's probably gonna, if you really have laid off people, you're probably not going to have as much credit, but you're going to get some credit here, and you're not going to be paying so much, I guess I should say. So you can ask for an advance on that credit and get it refunded. So there's also two different sections to this. There's the employees with the employers, with less than 100 employees. Credit is based on the wages paid to all employees, regardless if they worked or not. But if you're over that 100, they have to be paid to employees that did not work during that calendar quarter. And so that's where you're going to have to track it. We don't know yet how that's working either, because we've seen some of the payroll software is coming out, and they'll track paid employees that were laid off or weren't able to come to work, or said they had to take care, they didn't have daycare or things like that. But we don't have all that information. Just know that you're going to have to track it and be able to prove it. We don't know if it's sent in or just keep the records. So more to come on some of this stuff. Some of these credits and so forth, they just haven't came up with how you're going to substantiate the information. So,
absolutely. Thanks, Dave. The next area we're going to cover is changes to FMLA under the Family First Coronavirus Response Act. So we are going to do our best, but remember, we are accountants and not HR. So we do have Teresa Vandenberg, who works in our Sioux City office, and she is our director of HR. She has contacts at SHRM and all across. So if you have any specific questions, we can definitely get you in contact with her and try to help determine your scenario. But in the meantime, we still think it's worth covering, so we're going to do our best to go over this with you. So some of the key items, we're going to call it the FFCRA because otherwise it's kind of a mouthful, and we like to use acronyms. So the first item is that it requires private insurance plans to provide free COVID-19 testing. It also provides emergency paid sick leave to workers, and then also expands the family and medical leave. So we'll discuss on those a bit more. Offers increased funding for state unemployment. Employers do receive 100% reimbursement for paid leave that's pursuant to this act. But of course, remember, the government doesn't want us to double dip, so then those wages aren't eligible for the Paycheck Protection Program. This was effective for any leave that happened after April 1st of 2020. And then we found that the Department of Labor has a really great question and answer page. So we've included a link to that they offer answers to a lot of really specific questions. So I recommend looking there as well. So who is covered? So first we'll cover the emergency paid sick leave, because these are kind of two different policies. So under the paid sick leave, employees are eligible for up to 2 weeks of sick leave, and it's paid. So it's full pay for those that are sick themselves, but it's only 2/3 pay if it's for someone else that is sick, or perhaps school closures. Emergency paid sick leave covers employers that have less than 500 employees, and then all employees, no matter how long they've worked there. So there's no, if they just started 2 weeks ago, they could still qualify. As far as the FMLA expansion goes, employees are eligible for up to 12 weeks of FMLE for school closures. So the first 10 days would be unpaid, and then after that, the following 10 weeks would be at 2/3 pay for those employees. FMLA expansion covers employers with fewer than 500 employees. They must have been employed for at least 30 calendar days, and then they must be taking care of children under the age of 18, and their school has to be closed due to a COVID-19 emergency. No, there's a lot on this slide here, but remember, we thought you could at least go ahead and pause and look further if you'd like. But there's some exemptions out there that the Department of Labor has provided for those that don't have more than 50 employees. Really, the key to these is being able to document that you have an economic hardship, or by paying for these wages of people that aren't working would cause a hardship for you. And so really, they say there's nothing that you have to apply or send in for this exemption. You just need to keep the documentation with you and retain those records in your files in case, I guess, a claim ever comes up in the future. As far as eligibility goes for paid sick leave, because remember, we've kind of got those two different policies. So the employee is subject to quarantine, so it has to be a required quarantine. That's one scenario. Another is that they were advised to quarantine. And the third is that they're actually experiencing symptoms and they're trying to seek a diagnosis. So those would all qualify as those employees under paid sick leave. The bottom three, so the employee is taking care of an individual that is under that quarantine or has been advised to self-quarantine. The employee has a child whose child care center is closed due to the COVID-19. And then also if the employee is experiencing substantially similar conditions. So maybe they don't have COVID-19, but they're sick with something very close. So again, remember, lots of slides. If you have a lot of questions, we definitely think Teresa would be the person to speak to. So, but full-time employees can receive up to 80 hours of paid sick leave. Part-time employees can receive sick leave for the standard hours worked or the average of hours worked over the course of 6 months. So there's some calculations to be done there. Employees can receive up to $511 per day if they meet the paid sick leave eligibility requirements. So that'd be the first, second, and third items on our previous slide. Employees can receive up to $200 a day if they're under the 4, 5, or 6 on the previous slide. So basically, like if they're gone taking care of their children that don't have school, they're still eligible for that $200. So you get this money that you're spending on these employees through a credit against your payroll taxes, then again, under the qualifying family medical leave. So if the credit is more than the tax, you can again use that Form 7200 to request a refund and get the money back in your hands. So hopefully that helps make a little bit more sense of it. There's a lot of good resources out there and people that are very qualified to speak about this in depth. With that, I think that kind of wraps up our presentation. We wanted to welcome you can contact Dave or I, Alex Keller, and you can also contact whomever you normally work with at Williams & Company, or we left the generic email address and someone could assign you to someone for help at info@williamscpas.com. Otherwise, you can go to williamscpas.com and find the email addresses for all of the managers and shareholders there. Thank you again for joining our presentation, and we hope that you stay strong and healthy and your businesses are able to weather this challenging storm. So thank you.
Thank you.